On January 16th of this year, CoinDesk published an article titled, "Can Crypto Dethrone the US Dollar?" Here's Morgan Stanley's take. According to the bank, US monetary policy, coupled with the use of economic sanctions, has driven some countries to seek alternatives to the dollar. While the rise of stablecoins may highlight the need for fiat currency, this shift is reshaping the global financial landscape. Looking deeper, there has been growing interest in digital assets like Bitcoin, an increase in stablecoin volumes, and the potential of central bank digital currencies, CBDCs, to significantly transform the currency environment. Morgan Stanley's head of digital asset markets noted that U.S. monetary policy and sanctions are pushing countries to reduce their dependency on the dollar, fueling interest in digital currencies such as Bitcoin, stablecoins, and CBDCs. However, it's crucial to recognize that stablecoins pegged to the US dollar may actually reinforce the importance of fiat currency. Their continued evolution and acceptance by mainstream financial entities highlight their potential to reshape global finance and, in some ways, reinforce the US dollar's position as the dominant global currency. This is significant as we witness a broader shift in how currencies, finance, and transactions are becoming increasingly digital. Despite ongoing claims, such as those from BRICS nations, that the dollar's dominance is ending, these developments, dating back to the summer of 2023, suggest the opposite. The digital landscape may, in fact, strengthen the dollar's role. This narrative has been circulating for quite some time now, and I even made a post myself saying, "The dollar is dead, the US is doomed." We're witnessing the perfect problem and solution being presented to the world simultaneously. The issue is that 99% of the general public is distracted. There are major projects and solutions in the works that could drastically improve the global monetary system and lead to a technological revolution like no other. I strongly believe that the growing trend of de-dollarization, the use of alternative settlement currencies, and the BRICS nations developing new currencies are all accelerating the rise of a new financial system. The key is focusing on connections with the IMF, blockchain, and distributed ledger technology, DLT, which are already being utilized, albeit without full-scale implementation. The infrastructure for this new system is being built as we speak. Looking at the IMF's report on maintaining US dollar dominance, it acknowledges that while the dollar might lose some ground, it will still play a central role. The international monetary system seems poised for major shifts due to economic, geopolitical, and technological forces. The report even suggests that new technologies could both help and hinder emerging market economies, with effects that might actually reinforce dollar dominance rather than erode it. Digital technologies could enable new forms of money that challenge fiat currencies and ignite a new era of currency competition. But it's equally likely that these innovations will lead to more centralization, with some currencies gaining even more power and influence. In other words, these changes may strengthen, not weaken, the dollar's dominance. Now, adding to this, we see BlackRock's strong push for Bitcoin. Why are they so heavily promoting it? Here's what I think. If we consider what's happening with BRICS nations, many have been accumulating large amounts of gold, starting as far back as 2010. This chart shows how foreign banks and investors have been flocking to precious metals, driving them to record highs. You can see the increase in gold purchases since 2009 to 2010, which coincides with the financial crisis of '08 and the breakdown of the fiat currency system. The fiat system revealed its true nature. It's propped up and won't return to normal, with massive money printing being the new norm. From 2009 to 2010, we also saw the launch of Bitcoin. Is it so crazy to think all this might have been part of a plan? When you look at BlackRock's stance on Bitcoin, it's interesting. They initially dismissed it, but in the last few years, they've done a complete 180. BlackRock now holds over 365,000 Bitcoin, valued at over $24 billion. Take a look at what's really happening.
First time we've had an opportunity to talk to you about it, which is Bitcoin, the Bitcoin ETF. We're going to be talking to Gary Gensler, the chair of the SEC, who made that decision reluctantly, maybe even begrudgingly, which was announced just 2 days ago, and we talked a lot about yesterday on the broadcast. How big a deal is that for BlackRock? And this was for you a big switch as well, because you were a naysayer for a very, very long time.
Yeah, I probably switched for the first 3 years of thinking about it. I was a naysayer, and about 2 years ago I switched. And I'm actually, you know, as I said in the last 2 years, I'm a big believer.
Are you a believer personally? Meaning,
Yeah.
is the Fink family? a Bitcoin buyer or a buyer of this new ETF?
Well, now I could do that. I cannot, I don't want to compete with our clients, so I don't buy single assets. I'll buy mutual funds, I'll buy single ETFs. So I have an opportunity to do that now. But I'm a believer in it because I do believe it is an alternative source for wealth holding. I don't believe it's ever going to be a currency. I believe it's an asset class.
You don't believe it ever becomes a currency?
No, I think we're going to create digital currencies. We're going to use the technology for it. We're going to use the blockchain.
How important is that, though, to then the long-term value proposition
of Bitcoin?
Of Bitcoin. If it's not something that ultimately becomes a currency, if it's simply, we'll call it digital gold, it's an asset of some sort, what does that mean?
It means,
in terms of price,
I believe, I believe it goes up if the world is more frightened, if people have fearful of geopolitical risk, they're fearful of their own risk. It's no different than what gold represented over thousands of years. It is a asset class that protects you.
Right.
And unlike gold, where we manufacture new gold, we're almost at the ceiling of the amount of.
They're constantly pushing the narrative, always saying things like Bitcoin is this or Bitcoin is that. More recently, even BlackRock has jumped in, heavily promoting Bitcoin, claiming it should be included in portfolios for its uncorrelated returns. Take a look.
I believe Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though. It is an instrument when you believe that countries are debasing their currency, debasing their currency by excess deficits, and some countries are. I believe we have countries where you're frightened of your everyday existence, and if you have an opportunity to invest in something that is outside your country's control, then you can have more financial control. And so I'm a major believer that there is a role for Bitcoin in portfolios.
What's happening here is that BlackRock is in a position to push Bitcoin heavily. They're marketing it to the masses, the retail sector, as part of a broader strategy. This is being done to prop up the US dollar, especially at a time when de-dollarization is at an all-time high and major nations are pushing back against the US dollar and its financial system. With BlackRock's ETF, Fidelity's ETF, and others, these moves not only bring in a significant amount of Bitcoin to the US, but also strengthen the US dollar. Remember, the most liquid trading pair for Bitcoin is with the US dollar. So this helps reinforce the dollar through digital currencies like Bitcoin and even stablecoins. However, the issue here is the true story behind Bitcoin. As Raoul Pal, former Goldman Sachs, said, the truth is finally coming out about the connection between Bitcoin and intelligence agencies, something he's been discussing for years. Smart people are starting to figure it out. Check out what Raoul Pal had to say.
Tell me more. I said, and I think the US government and the UK government invented it, which is the NSA and the GCHQ in the UK, who are the two world centers of cryptography. Because even how the white paper's written, it's
you think they're
transatlantic.
Satoshi?
Yes. I always have. And I asked the Department of Defense, they said, yeah, we've considered that too. That they seeded
Do you think it was
experiments.
official, or it was just people from that went rogue?
I don't think it's necessarily a rogueness. I think like Google have like Google X, where they do tons of experiments, right? They know that one of the esoteric risks for the entire Western system is the issue of money. So there's probably groups of people who are given things to try. And if you can seed a new system, maybe they tried 100 of these and just one succeeded. We don't know. But it would make sense because that's what they do, this kind of stuff. So one of these took off. And so I think it's always been. I don't think it's a coincidence it came out of the financial crisis. I don't think it's a coincidence that the halving cycle and all of this is all related.
I completely agree with you. We need to think about this logically. The central bank started rushing to buy gold around 2010, coinciding with the announcement and launch of Bitcoin. It's no coincidence in my opinion. I believe this was entirely planned. I've mentioned many times on this channel that I suspect government involvement in this. In a recent podcast featuring Catherine Austin Fitts, Whitney Webb, and Mark Goodwin, titled Using Bitcoin and Stablecoins to Expand Dollar Dominance, they discussed the dangers of central bank digital currencies and the financial control exercised by banks. They also explore how private currencies can offer freedom rather than leading to more dangerous forms of financial transaction control. Webb and Goodwin addressed these issues in their investigative series on the chain of issuance and custody, linking it to networks explored in Webb's 2-volume work on the Epstein money laundering networks, titled One Nation Under Blackmail. Before I play this clip, I want to address the misconception that Bitcoin is a safe currency for transactions. People often claim that Bitcoin offers privacy and freedom, but we must remember that cryptocurrency is extremely transparent. Unlike using cash, where transactions are anonymous, all on-chain transactions can be tracked and traced. Authorities can identify the wallets tied to individuals, even through IP addresses or VPNs. The ability to trace and track these transactions is only becoming more sophisticated. When we consider what's happening with Bitcoin, the narrative that it represents free, untraceable money is misleading. This belief reinforces my view that government entities might be behind its promotion. Why would the government support a system that is so transparent and easily monitored while allowing people to think it's a means of escaping traditional financial systems? It's all nonsense, so listen closely to this discussion.
Just let me stop for a second.
Sure.
So 90 or so percent of the ETFs, so exchange-traded funds on Wall Street that own Bitcoin. So instead of me having to get a wallet or get an account on an exchange, I can go to Fidelity or Schwab and I can just click and point and I can buy Bitcoin in the form of a stock, right?
Yeah.
And so Fidelity or BlackRock have to worry about being the custodian. Okay, 90+% of the volume of the ETFs right now are custodian at Coinbase custody. Okay?
Yeah.
But now, and I'm going to do this slowly and carefully, the U.S. Marshals manage the Department of Justice Asset Forfeiture Fund. And the Department of Justice Asset Forfeiture Fund has now seized over 200,000 Bitcoin. And they chose Coinbase custody to be their custodian. So now we have the Department of Justice and Wall Street sharing one custodian. Do you have any idea how frightening that feels to me?
Adding to that is the fact that during the last, when Trump was in office, under Steve Mnuchin, there were direct discussions, I believe direct meetings between the Treasury Department with Coinbase and Zappos specifically.
Yeah.
And Jared Kushner, Trump's son-in-law and who was a top advisor, had discussed openly with Mnuchin the possibility of creating the USD currency or USDC before Circle's USDC dollar stablecoin even existed.
Yeah.
And this was coming from a Sam Altman blog post. And of course, Sam Altman is one of the main proteges of Peter Thiel, who is also very involved in this space. And actually, Winsace is frequently referred to as the Peter Thiel of Latin America and has in an extreme amount of connections to the so-called PayPal mafia, of which Peter Thiel is part, which is what we discussed in our last piece, this Endeavor network that's tied to people like Reid Hoffman of PayPal mafia fame, and also Pierre Omidyar, who bought PayPal from Peter Thiel and Elon Musk and the other co-founders of PayPal, and who is the creator of eBay, which has always been essentially very intertwined with PayPal, at least for more than 20 years.
As we consider all of this, it becomes clear that we're looking at a hierarchy, a food chain of the elites. When we examine crypto, Bitcoin, and various ETFs, it's evident that the ultimate goal is to reinforce the dominance of the dollar. Many people say they're buying Bitcoin to escape fiat currencies, but in reality, they're inadvertently supporting them. Even a Federal Reserve governor has pointed out that USD-pegged stablecoins are bolstering US dollar dominance, and the same goes for decentralized finance, DeFi, and these ETFs. It's almost comical how this all plays out. We can now see the bigger picture. These currencies were just waiting for the right moment to emerge, and now that they have, they're reinforcing the very monopoly system we've been trying to escape. However, I firmly believe we are moving toward a digital future. While it seems like we're transitioning away from fiat currencies, digital currencies are becoming increasingly significant. The crypto space is now too large to ignore, and it's essential to be selective about which assets you choose to hold. I hope you found this video helpful. If you did, please like, subscribe, and turn on notifications for more free content. Thanks for watching.